Okay, good morning. It's Vincent Randazzo from the Market Intelligence Desk here at Nasdaq. Just want to give you an update on what we've seen in the markets in the last couple of days. Friday session obviously really messy on the back of some global news, notably out of China, where they changed some of the margin requirements for shorting stocks, and that in turn spooked Europe, which had a huge run so far this year. So I think you had some profit taking join in the party there, and that of course spilled over into the U.S. In Europe, they started talking a little bit more about Greece again and what a contagion event or an exit from the euro might mean to the rest of Europe. It remains to be seen if this is really going to be an issue or not, but certainly it was an excuse to sell, and that's what we saw. In the U.S., we saw the S&P 500 break below the 50-day moving average and close there for the first time in a little bit of time. If you look at the chart behind me here, you can see that move yesterday. We did get down as low as 2073, which is not a level of significance, but it just shows you how wide the range was on the day. Today we're on session highs here, which is actually 1 point higher than where we opened the day, which was the highs of the day on Friday. So if we get a close above there, it could mean that you get a couple more days of bounce, but ultimately really what you see here is this range. So between, call it 2110 on the S&P and just being conservative here, 2040 to the downside. Between there, we're just range bound, and we're waiting for a catalyst to break us out of that range. If earnings come in better than expected as we get through the season, maybe that's the catalyst, because we have been kind of consolidating here for quite some time. I mean, really, since about the middle of February, we've really been range bound for the most part. On the S&P, that's the story. Now for the Nasdaq, if you bring up that chart, we had an RSI sell signal that ticked off sort of towards the end of middle of March, and we've been sort of consolidating since then. Nothing really terrible looking, really, to be honest with you. It's just a matter of consolidating the gains that we've had. And what I'd like to see is a return to relative strength. So this is just the S&P against the Nasdaq. So the fact that the slope of this line is generally positive, that means that the Nasdaq has outperformed the S&P. We want to continue to see that as a means of leading us out to new highs again. So that's what we're looking for there on the Nasdaq. We're in the process right now of filling the gap from Friday. You can see that here. So if I zoom in, you can see that big gap that was left from Friday's move, the gap down, and now if we're able to again range bound here between about 5,015 on the upside and then call it 49 and change on the downside, just kind of a tight range there. So again, I think earnings is going to be the key here. We're just waiting and seeing, and in the meantime, see how we close. If there's any volume that comes in on this move on the upside, it would also make us feel a little bit better for continued upside in coming days. But that's it for now.